Welcome back, guys, to another video. In today's video, I'm going to teach you one of the most profitable moving average strategy you can find on the internet. Now, I'm going to teach you step by step on how you can trade this strategy, and this strategy is different from all you've seen on the internet. We are just going to be using one moving average and another secret indicator. So if you want to find out how, stay tuned. Let's dive in. So guys, this is how the strategy works. You're going to be using two indicators. So first, we add the moving average, which is the simple moving average, which is the 50 simple moving average. That's what we're going to add first. Let's add that 50 simple. Let's add that. So you type simple moving average. That is it. You click it, then you go to the settings, then put the length to 50. Let the length be 50. Then you can change the color. I would like to change this to white so that we can see it better, because we are using a black background here. So let's make it more thicker. Yeah, perfect. So the other indicator we'll be adding is the stochastic indicator. That's the other indicator we'll be adding. We're adding the stochastic indicator. So this is the stochastic here. So you click on stochastics. Don't click on stochastics RSI. Click on stochastics only. So you can do everything I'm doing. If you are using the TradingView platform, it's free. You don't need to pay for anything. So we are going to uncheck and check some things here. Upper band, let's put this as white. Let's change this to line. You remove it from dash line, change it to line so that it can be visible. Then remove this middle band, lower band, put it at white, and here change it to line. But again, I think that's all we are good to go. Then yeah, let's leave it. If you like, we can uncheck the label. You can check the label and value and price, but yeah, let's uncheck them because they are not valuable. This is all we just need. We just need this moving averages on the stochastic and the levels. So now, before we start anything, let me just explain basically what the stochastic oscillator, how it works. Now, the stochastic oscillator has two levels we are working with, which is 80 and 20. 80 and 20. 80 and 20. When is at 80, what does it mean? It means the price is overbought. When is at 20, it means the price is oversold. You understand? So when it's oversold, we expect it to buy. When it's overbought, we expect it to sell. You understand? So that's just the concept and how this stochastic oscillator works. So let me explain how the moving average works here. So now we are using this 50 moving average to just flow with the trend. You understand? So we are using this 50 moving average to take retest in the market. For example, the market was a bit ranging here. You understand? On an uptrend here, because we can see high being broken for a shorter period, went down, but then we are in a ranging market. Yeah. So I think we're on an uptrend here. So you can see when we're on an uptrend, the market came to retest here. Yeah, this is all what we just need. We want to see first that we want the market to first break the moving average, 50 moving average first. It broke it here. Then we now want to see it to retest that line. And when it's retesting that line, we want to see it to cross the stochastic indicator below. Which stochastic indicator below? We want it to touch the 20. The 20, which means it's oversold. What does it mean it's oversold? What did I tell you? I told you guys that when it's oversold, we're expecting it to buy. You understand? So whenever the market has crossed the 50 upward, then that's commonly known as an uptrend. But the market can't just be going up. It can't just be spiking up. It needs to come back and take some orders. So now that is when we capitalize on opportunities like this. So we wait for the market to break above the 50 level, then wait for it to cross the stochastic oscillator below 20. We want it to touch 20. Then when the crossing to happen below 20. So it never happened here. It crossed it here. What level was this? This is 34.78. So this is not, let me zoom it for us to see clearly. This is not 20. We want to see it to touch 20. I want to see a retest. So let's proceed further. Will we see any opportunity here? Yes, we finally saw one. We saw a crossing here. We saw that the market came here to test this and it's crossed it here. So what do? You enter your buy here. Whenever you see the market enters this 20 zone and it crosses it from there, you enter your buy. You understand? So you enter along from here. So where did the crossing happen? The crossing happened here. The crossing happened here. And for more clarity, you wait for the market to break above the 50 moving average, you understand? Because we know it's a retest, but for more clarity, you can wait for it to break above. So if you want to enter this market, you enter on this candle close here. So now for this strategy, some people will say maybe you should close here, maybe when the stochastic oscillator is oversold, but I won't advise you to do that, because the best way, which I know is more for profitable, is to have a fixed risk to reward. And on which fixed reward are we going to use? We're going to use 1:2, which is this. So you enter here, then your stop loss below the low, this candle here, then aim for 1:2, and you can see how it came beautifully. You see the market even try to break this trend, but this moving average held it back, we can see, and we got a sweet nice profit here. So same thing, you can see another example. And guys, look at this. Is the current Euro USD chart. This is Wednesday, 21st of February. This happened yesterday. I'm recording this video 22 of February 2024 on the Thursday. You can see this happened yesterday. So this, I'm not like cherry picking any chart. I will go back and check and take more and more examples. You can see what happened again. The market came to bounce off of that 50 simple moving average. So you come and check on the stochastic. Did it indicate that the market is oversold? Yes, it's indicated that the market is oversold. You can see it touched the 20 level. You can see. So you enter your long here, your 1:2, and you can see how it came beautifully. You guys can see how it came beautifully. Guys, this is not magic, this is real. This is the recent chart, and let me take you guys back in time so that we can do it together, so you can see that this is real and this is not any magic or any trick. So like I told you, you see what happened here. It crossed it above, it never touched here, so we couldn't enter this trade because it never bounced. We wanted to touch, make sure it touches the 50 simple moving average. Don't enter because you know it's close. Don't do that. So we wait for it first to cross it above. So after it crossed it above here, waiting for it to touch here, but it never did, so we couldn't enter this trade. So you can see it was a short long and it went back down. You can see, just follow the rules, you become profitable. You can see. So did it cross it above again? Yes, it crossed it above again and it came back to retest it. You enter in 1:2. You can see sweet profit, guys. This thing is just so super easy and profitable. You can see 1:2. And guys, don't be greedy. You can see how we net this profit 1:2. If we have maybe targeted for 1:3, we wouldn't have made this profit, you understand? But in other previous trade, we would have made more. But for beginners, I would advise you to go with 1:2 because you have more win rate and that will help your psychology a lot. You guys can see what's going on. Do we have any other opportunity again here? We see, okay, so you see it went back downward into the trend. So in this case, we're expecting the market to retest it here, and the retest happened, but this ended up in a loss. Guys, you can see this doesn't come always. That's why you need to apply proper risk management. No trading methodology in this world is 100%. If you see anyone that tells you his or her trading strategy is 100%, run for your life. Run. You understand, guys? No trading methodology is 100%. None. You understand? So there's lapses. So if I tell you that this strategy is 100%, I'm lying. It's not true. It's not possible. You understand? So you can see we had a loss here because now the market broke. Because now we're in an uptrend, then the market broke it downward, then was trending downward already. So we knew it's a downtrend. Then it came here to retest this, but it never came. Let me mark that up because we should have entered our short here because the crossing happened went to our short here, stop loss here. You see we're taking up, but you can see we had 1, 2, 3 profitable trade, and we took 1 L here. So are we not? So let's say we were risking 2%. So we should be up by 5%. Because we're using 1/2, just by 5%. Because we won 3 trades, so that's 6%. Then -1, 6 minus 1 is 5. So we're up by 5%. So you can see how the strategy is very, very profitable, guys. So if you have any video idea you want me to work on or any strategy, comment below. Let me hear them, let me have them.